Hi everybody, this is Lara at Elliott Wave Gold with your end of the week analysis for US oil for the trading week ending Friday, December 6th. It looks like an Elliott Wave triangle may be complete. It's possible price could move just a little bit higher before it is complete, but it certainly could be complete here, and so I'd be expecting for the main preferred wave count to see a downward breakout next week or very soon after. Elliott Wave analysis first, classic analysis last. This Elliott Wave count is my preferred Elliott Wave count because it has more support from classic technical analysis. This Elliott Wave count expects that for oil, the bear market is most likely continuing, and I'm labelling it Super Cycle Wave 2. The structure is an Elliott Wave double zigzag, which are fairly common corrective structures, particularly for a second wave. The first zigzag in the double is labelled Cycle Wave W. It subdivides 5, 3, 5 and it ends here. The double is joined by a 3 in the opposite direction labelled X, which subdivides as a zigzag. That's the most common structure for X waves. And the second zigzag in the double, to be labelled Cycle Wave Y, has a purpose to deepen the correction when the first zigzag does not move price deep enough, and to give the double zigzag a clear downward slope rather than a sideways look. Cycle Y needs to subdivide as a zigzag labelled A, B, C. Primary B within it may not move beyond the start of primary A above the invalidation point. At the weekly chart level, I'm labelling primary wave B a triangle, but I do also have at the daily chart level two ways of labelling this movement. Let's take a look at the triangle labelling first, where the low for intermediate B down here is this point down here, and here's the start of cycle Y. We see the structure a little bit more clearly here at the weekly chart level. A, B could now be complete, and then C down needs to unfold. I'm going to wait until I have a downward breakout below the triangle and a very clear, obvious breakout from the triangle structure at least before I give you targets for primary wave C based on Fibonacci ratios to primary wave A. Because at this stage, although the Elliott Wave triangle certainly does look like it could be complete, we still don't have a breakout from the triangle. Let's take a look at the structure more carefully at the daily chart level, where B is this low down here. Here's C, D, and now E of the triangle could be complete, subdividing as a zigzag. A is a leading expanding diagonal. B was a quick, sharp zigzag, and C could now be a complete 5-wave impulse labelled 1, 2, 3, 4, 5. It certainly could continue higher. Minute wave 5 could continue further. We don't have a bearish candlestick reversal pattern. We don't have a clear turn down from this upward swing yet, but the Elliott Wave structure is complete, and so the triangle, the whole thing for primary B could already be over, or could end very, very soon indeed. The most common point for E waves of Elliott Wave triangles to end is to fall a little short of the AC trend line. There's a bit of room for it to continue a little bit higher and still fall short of the AC trend line. And so if we do see this upward swing continue a little further, I would expect next week it won't be by much. I will be expecting most likely downward movement next week. If intermediate E does continue higher, then it may not move beyond the end of C above the invalidation point. That invalidation point is absolute because the rule is absolute. A new high by a fraction of a cent on a tick chart is enough to invalidate this wave count, and if it's invalidated, then this would be the next wave count that I would use. It's important, or essential really, if you think an Elliott Wave triangle is unfolding, to always consider an alternate. This alternate wave count considers a combination for primary wave B, whereas that first chart considered a triangle for primary B. Within this combination, intermediate W is complete, well off to the left of the chart. It's subdivided as a zigzag. And then intermediate wave Y is expected to be a flat correction. Within the flat correction, minor A is complete off to the left of the chart, and here's minor B subdividing as a combination. When it's complete, minor C would be expected to move beyond the end of A to avoid a truncation. Within minor wave B, this combination has a zigzag for minute W. The double is joined by a 3 in the opposite direction, and now minute Y is expected to be a flat correction, subdividing 3, 3, 5. Within the flat, minuet B needs to retrace a minimum 90% the length of A at this price requirement that has not been met yet, and so for this wave count, more upward movement next week is required. Minuet B may move beyond the start of A as in an expanded flat for minute wave Y, and so if that first daily chart is invalidated, then this would be the next likely structure that could be unfolding for primary wave B. At the monthly chart level, this is an alternate wave count. It looks at the possibility that the bear market was over for oil down here and a new bull market has begun. If we move the degree of labelling up 1 degree, this could be a completed zigzag for supercycle wave 2. If that's the end of a second wave, then it's the start of a third wave, and a third wave may only subdivide as an impulse. The first wave within it must be a 5-wave motive structure, either an impulse or leading diagonal, and this upward movement cannot fit as a leading diagonal, but it will fit as an impulse. The second wave correction must be a corrective structure. This could be a complete zigzag, and the third wave within the third wave may only subdivide as an impulse. The target for it is to reach a common Fibonacci ratio to cycle wave 1. Let's take a look now at the weekly chart level from this low. This point down here, here's a zigzag for cycle 2, here's the start of cycle 3, with primary wave 1 possibly complete here and primary 2 continuing as a double combination. The biggest problem with this wave count now is the structure of primary wave 1. It looks like it could be either a zigzag or an impulse, but when you try to see it as an impulse, there's a problem in the middle of the third wave here. There's a fourth wave in here, which is only possible because it may have been so very brief to see at an hourly chart level. This third wave just doesn't subdivide well as an impulse, and so in my experience and judgment, that reduces the probability of this bullish wave count in terms of Elliott wave. Let's take a look now at this possible structure. For primary wave 2, a second wave may not subdivide with a triangle as its sole corrective structure. Triangles unfold in B, X, W, or Y or Z or fourth wave positions, mostly B or fourth wave positions, but a triangle can't unfold as the sole structure in a second wave position. It can, however, be part of a combination for a second wave, and so that's what I'm considering here. The combination may be a zigzag for intermediate W. The double is joined by a 3 in the opposite direction labelled X, and the second structure in the double combination may have begun here, subdividing as a running, contracting or running barrier triangle. A, B, C, D, E. D still to move higher. Let's take a look now at D of the triangle, where it begins here. This point here, one of the 5 subwaves of an Elliott wave triangle should subdivide as a more complicated multiple, and the most common subwave to do so is wave D. And so now I'm going to consider a double zigzag, which is a multiple, for minor wave D of this triangle. The first zigzag in the double is labelled minute wave W. The double is joined by an X in the opposite direction, and the second zigzag in the double subdivides 5, 3, 5. Minuet C would be incomplete. 1, 2, 3 could be complete, could have a shallow fourth wave and then a final fifth wave. If intermediate wave Y is a running contracting triangle, then minor D within it may not move beyond the end of B above the invalidation point, but intermediate wave Y could also be a running barrier triangle where D may end about the same level as B, As long as the BD trend line remains essentially flat to the eye, a triangle here for intermediate Y would remain valid. Unfortunately, that is the only Elliott wave rule which involves an area of subjectivity, and so this invalidation point is not absolute. It could be breached by a little, and this wave count would remain valid. When D is complete, then E downward would most likely fall short of the AC trend line and should subdivide as a zigzag. It may not move beyond the end of C. This invalidation point is absolute. Classic technical analysis now, and this chart outlines some of the reasons why my preferred wave count for US oil at this stage does remain bearish. At this high back here, we had a bearish engulfing candlestick pattern with a long upper wick, and it had good support from volume compared to the 2 months immediately prior. Another strong downward month, very strong support from volume. The third month showed a little bit of weakness with a decline in volume and range and a long lower wick. We expected a bounce. As price is moving higher, the range is declining. The real bodies of the candlesticks are getting smaller. It started out with support from volume. It ended out less, but a little bit of support from volume here until we get to here. Another really strong bearish engulfing candlestick pattern engulfs all of the 3 prior real bodies. This is a very strong bearish reversal pattern. Now oil has been moving essentially sideways. The last completed upward month lacks support from volume. As price is moving sideways, volume is declining. RSI is neutral, room for price to rise or fall. MACD is bearish but not fully so. On balance, volume is bouncing up off support. Here it made new highs prior to price, and so if you have a bullish outlook for oil, this is one piece of information which would tend to support that view, but volume in the candlesticks support a more bearish outlook. At the weekly chart level, it looks pretty obvious that there may be a classic triangle pattern unfolding. While Elliott wave triangles are always continuation patterns, classic triangle patterns may be either continuation or reversal patterns. From a classic analysis perspective, we would need to wait for a break above resistance or below support, a close outside of those lines on a day which should have support from volume, particularly for an upward breakout. Not so necessary though for a downward breakout, but that would add confidence in the breakout. This last upward week has some support from volume. It's a higher high and a higher low and a green candlestick. With support from volume this week, it looks like we may be getting a little more upward movement up to this resistance line in the first instance. ADX is too low, it's below 15, the DX lines are whipsawing, there is no clear trend. Oil is currently very obviously consolidating. ATR declining and now flat as price is moving sideways. On balance, volume is giving bullish signals, a break above resistance. This was a highly technically significant line and a test of support at prior resistance, now moving up and away. That would tend to support the view that we may see an upward breakout from the triangle pattern. That's not certain, but this does add a little bit of support to that view. RSI is neutral, room for price to rise or fall, as is stochastics, which is pretty normal during a consolidation. Within this consolidation, price is swinging from resistance to support and back again. Resistance and support seems to be narrowing. Stochastics at the weekly chart level isn't particularly useful in assisting to identify where each swing may begin and end. And so let's consider this daily chart in conjunction with stochastics. Here's a swing from support, resistance, support, coming back up to resistance. Stochastics is now just again entering overbought. Let's see if price is going to move a little higher. There's a bit of room above before it reaches resistance about 61.6. Stochastics isn't quite overbought. There certainly is room for a little bit more upward movement before this upward swing may end. There's a little bit of support from volume, not a lot, but there is a little bit of support from volume here. I would certainly allow for the possibility that we could see a little more upward movement next week before this upward swing is over, which is essentially what I'm saying for that preferred main daily wave count as well. The triangle, the Elliott Wave Triangle, could be complete, but there is certainly a little bit of room above for price to move a little bit higher yet. Having more confidence that the upward swing may be complete, we might like to wait to see a bearish candlestick reversal pattern or price reaching right up to support resistance and stochastics properly overbought at the same time, and then I would have more confidence that the upward swing could be complete. At the daily chart level, ADX also is below 15. The market is very obviously consolidating. On balance volume breaking above resistance here is another bullish signal, not too weak a signal, and this would tend to support the idea of an upward breakout above resistance, but we are not there yet. RSI is in neutral territory. That's all from me this week with your oil analysis. I hope all of our members are having a most awesome weekend.